Has Tesla bottomed? Are we done with the majority of the pain in the economy? Is the macro finally getting off of these low levels and recovering so we should get into the market? What's going on with Tesla? Do we have demand issues? Do we not have demand issues? Did these price cuts deal with everything? Lots of good questions out there. Lots of people who say they know the answers, but the truth is none of us actually know the answers. And so in today's video, I'm going to give you my opinion, my 2 cents on what I think is happening with all these different topics. If you're new, do me a favor, hit the like button, hit the subscribe button, ring that bell. This is Investing Against the Grain. My name's Nicholas. Let's get into it. Recently, I was on a Twitter Spaces, and I've been doing a few guest appearances on a few other people's channels. And there have been some comments talking about how I appear to have gone bearish on Tesla, that I'm one of these people who've gone from bull to bear. Let me dissuade you of all of this BS. None of that's true. I am a Tesla bull. Tesla Herbert has, refuted a couple comments, so I appreciate him for that. Yes, I am a Tesla bull. I believe in the long-term vision of Tesla, but what I am not at the moment is a bull on the economy. And Tesla lives within this economy. So this does have some effect on Tesla. And so in today's video, I want to unpack all these different things and just kind of paint my perspective about what I see at the moment and what is going to happen moving forward. Now, full disclosure, between my wife and I, we have essentially everything invested in Tesla. All right. So when it comes to being invested in Tesla, we're essentially all in. All of our other resources, assets are either in real estate or sitting in cash. And this is really why I've spent an extra amount of time scrutinizing where we are right now, and why I'm trying to be very diligent is because I do have a lot of cash on the sideline that I'm waiting to deploy. But as you could imagine, I want to deploy at the most advantageous point I can, while at the same time keeping cash as long as I can in case things turn out to be even worse with the economy and we go into another 09-08 era. So to get things kicked off, let me share my screen, and I want to paint a picture for you on what tends to happen when the Fed pivots. So actually, before I show this, let's understand where we are right now. We are in an economy that has just gone through some very high inflation. In fact, it's not just us, it's the world. The entire world is experiencing and going through this. And as a result, the Federal Reserve for all these different countries all over the world are all participating in the same, what's the word I'm looking for? Blunt instrument that they have, which is to raise rates. Okay. And when you raise rates, the whole point of doing that, which I'm sure you all know by now, we're all experts on this by now. But when you raise rates, what you're really trying to do is slow down the economy. All right. You're making it harder for people to deploy and borrow money. You're making it harder for people to really, go out and spend. Right. You're trying to make it so people are in austerity mode. In other words, people are in conserve my cash, conserve what I have, because things are tough and the entire economy is slowing down. Now, the reason the Fed does this is they raise rates to slow the economy down so that inflation can come back down. Why is inflation bad? Well, because inflation, if it's just left unchecked, will get out of control. People won't be able to afford things. You just have mass hysteria. It affects, people of lower income, people who are live in poverty. It affects everybody, right? No one escapes inflation. It's just the severity of what inflation affects on you that is different between different socioeconomic classes. And so the Fed really wants to stop inflation from happening. The entire world wants to stop it. And so the way they do is by raising rates. And in turn, that slows the economy down, right? Why does it slow the economy down? Again, because it makes it harder for people to borrow money. It makes it less advantageous to invest. It makes it so that companies aren't making as much margin, so they start laying people off, right? And it becomes this whole, cycle that just kind of keeps happening until the Fed stops raising rates or until they start cutting rates to spur demand. So right now, we're in the rate hike cycle of it. And everybody keeps talking about how, oh, the Fed's about to stop, they're about to U-turn, all this stuff. And everyone acts like it's such a positive thing the second that the Fed U-turns, right? And I guess psychologically it is a positive thing because at least we know that they're done raising. And from here, it's just going to be them staying or cutting. And yeah, that's a positive thing to get to that point. It's a milestone, but that doesn't necessarily correlate to a positive reaction in the stock market. And this is one of my biggest points that I keep emphasizing. And so with that said, let me share my screen. So if you look at this chart that I have up, you can read, it says the majority of the decline in these bear markets occurred after the Fed's pivot. So I'm just going to go through these with you, right? So this was essentially the dot-com bubble, right, in 2000. So the Fed pivots. And here you can see that the Fed pivot essentially, in 2000. And what led from that with the market, right, if you look at this black line is the S&P 500, it actually went ahead and it fell 51%, right? So that's interesting. And here again, in 2007, right, that was when the Fed pivoted. And that's when we went ahead and we had the 08-09 catastrophe that happened. And again, if we look over here in 2019, that's essentially when the Fed pivoted. They actually pivoted at the end of 2018. And then we saw a 35% decline. So, just looking at it, and this doesn't mean it's going to happen again. But my point in showing this is to emphasize that just because the Fed pivots, that does not mean that the market will react in a positive manner. Now, it might in the very, very short term, but historically, we see that be a point in time where the market continues to sell off. Now, you may wonder why. Why does this happen? Well, let's think about it. How did we get to the point where the Fed pivots? Well, we get to that point because the Fed is trying to slow down the economy, right? And so if you think about it, by the time the Fed pivots, they're essentially pivoting because there's so much pain in the market, right? There's for companies, demand has just dwindled so much that they need to pivot and start cutting rates. But in order to get to that point, it means that we're trying to slow the economy. And slowing the economy is bad for growth. It's bad for spending. All right. So it's this kind of weird cycle, perverse area to be in that we are, for the health of the economy, we're trying to hurt the economy. This is essentially like doing chemo for the economy, right? We're essentially trying to wipe everything out so we can essentially try to start fresh. And so this is one of the reasons why I'm not very bullish on the economy, all right? And there's other reasons as well. I believe in listening to people who have been right over and over. And in my opinion, Elon Musk is one of the people who's been the most accurate when it comes to the economy. He talked about when we would have a recession. He talked about when inflation would fall off a cliff. And now he's talking about how he sees a very bad recession, maybe even worse than 08-09, in coming up here soon, right? Now, I would argue that I don't really see a lot of signs of it. Jamie Dimon is now saying that instead of happening this summer, that he sees it happening Q4 of 2023. But the point is, these people who have been right on the money time and time again seem to have this belief. And when you take that, the fact that these people who have been right at calling all of this, and you add into the fact that chart I was just showing you, or the graph with the nature of after Fed pivots to see the market decline, it just makes me want to be a little more patient before I start deploying the cash I have on the side. Now, again, context matters. We all have different financial situations. And for myself, with my wife, we have a lot of Tesla shares. So we are pretty comfortable when it comes to that. I can understand many people who are in accumulate mode where they are trying to get a certain amount of shares, while it's low as fast as possible, and they're just trying to discount dollar cost average. Great way to do things. Absolutely great way. What I'm doing is technically trying to somewhat time the market, right? And the reason is because I have the luxury to be able to do that right now. I'm very fortunate. We are very fortunate that we can be patient, wait longer, just keep letting cash build until we feel one of two things happen. Either one, we actually do go lower. And when I say lower, I could see us going below 100. I think if we break 100, we could see the stock going down to 90, 80. Some people out there think we could get to 60 at the lowest or 59 at the lowest. So that's definitely a possibility. But the point is, anything under 100, the second we break 100, we'll be deploying capital like there's no tomorrow. So that's situation one. Situation two would be for something to change, something materially to change, that we sit there and we say, okay, this is over. We aren't going to have a 50% drop from here. We aren't going to see a big 2008, 2009 type catastrophic recession, but that the story is meaningfully changed, right? And we are seeing things recover very meaningfully. At that point, okay, I don't care if I miss the first 15% up. Like, who cares? As long as I know that we're not going to see another, 30% down. That's the real fear, if you will, is to have that happen. So everyone's situation is a little different. So this is just one scenario I want to show you. And I just want to highlight my bearishness is on the economy, not specifically on Tesla. However, Tesla does show signs of the economy slowing. And so we recently got these price cuts from Tesla, right? And so these price cuts, Tesla wouldn't just cut the price for no reason. If Tesla had all the demand possible, they wouldn't cut the price of the vehicles. Why would they? Right? Because if they can make more money, that means that they have more capital that they're putting away to put the work for the mission. However, they're not doing that. They went ahead and they massively cut prices for all their vehicles worldwide. Now, in my opinion, I don't even think there's really a debate that they did this because there was a demand problem. The world is slowing down. Cars are becoming more expensive because loans are more expensive. And the two biggest purchases anybody ever has in their life tends to be a house and a vehicle. And those tend to be bought with loans. And when they're bought with loans, what that means is you have to take a loan out at a certain interest rate. And when the Fed's raising rates, interest rates are going up. And when interest rates are going up, that makes it more expensive to buy your car, right? Like this is pretty straightforward stuff. And so when that happens, guess what? There's less people out there that can afford to buy these cars, right? They're just more and more expensive. And so one thing has to happen, or one of two things. Either rates have to come down or Tesla has to cut prices to spur up that demand. And so Tesla has chosen to spur demand by cutting prices worldwide. Now, a lot of people talk about how Tesla, they're cutting prices because they have better manufacturing abilities, or because costs for lithium have come down, and all this is true, but it doesn't live kind of in a vacuum, right? And it doesn't mean that all those cost benefits will happen tomorrow or this earnings or next earnings, right? It's probably it's probably going to take some time to see that work its way into the numbers. And so I would estimate that we're going to have a pretty big margin hit this quarter and next quarter. So when I say this quarter, I mean Q4 earnings and Q1. I would be surprised if we didn't have a margin hit on those. But over the long term, I do think all those numbers will come through and Tesla will look better. I don't think they'll be as good as they were in the 30+%, at least not these prices, but they'll be high 20s, right? And that's assuming no FSD. But let's go back to the demand potential issue that Tesla's having. All right, so I'm going to share my screen again. Let's see. Okay, cool. So this probably looks pretty familiar to all of you. So total new inventory. This page shows historical data of the total number of new and existing inventory for Tesla for all the models available in stock in the United States. So this is looking specifically at the lens of the United States, all right? And I've just over the last 30 days. So here's something that I found pretty interesting. So we saw Tesla having a big buildup, right? Let me actually, let's change this to 60. Or you know what? Well, yeah. Well, okay, let's just do 120. We'll just see what this looks like. Okay. Yeah, here's perfect example, okay? So this was in December, right? So we see December here. So this is where we just kept seeing the stockpile build up and up and up and up. And then all of a sudden Tesla makes their big cut, the 75 or the price cut, the $7,500 credit plus 10,000 supercharging miles. And what happens? Man, we just see all of a sudden inventory plummets, right? And it plummeted pretty much all the way to, well, I mean, I guess it did plummet down to 500. And then what happens? We get into the new year, the IRA rules come out, who's applicable for it, and the Model Y pretty much isn't, Model 3 pretty much isn't, I don't think. 7-seater, all this stuff. You guys know the story, you know the noise. The point is, nothing really qualified for it. The Mustang Mach-E doesn't qualify for it. I mean, it's just, honestly, it's a joke what they did. And so people were holding off on purchasing, right? I mean, there's two things. One, people are holding off purchasing. Two, people just aren't purchasing because prices are higher and loans are more expensive. So you have both those things happening at the same time. And so we saw inventory build and build and build and build until Tesla said, okay, we're making these huge cuts all across the world, not just in China, in Europe, in the United States. And all of a sudden, we saw everything drop off a cliff yet again, right? Like, this is crazy. This shows you that at the right price, Tesla will be able to sell vehicles. And these big price cuts don't include the benefits of the $7,500 from the IRA. So what I find interesting now, if we just kind of try to zoom in on this a little bit, let's go down to 30 days like we were originally. We're starting to see potentially a little bit of a plateau here, right? We're seeing about 1,276, 1,270 vehicles in inventory. Now, what I fear is that this starts to rise. Now, hopefully it doesn't. Hopefully we can find some kind of, plateau here and just steady state of a certain amount of vehicles in inventory. But the truth is, this could prove to not move the needle as much as Tesla thought it would. Now, I know this probably be a very unpopular opinion. People will probably think with this, like, this is the cut to end all cuts, that they'll never have to cut again. But again, I would hold that type of thinking off, because you never know what could happen. Again, my whole thing isn't about Tesla. It's not about what price Tesla has their vehicles. It's not about the quality. It's not about the competition at all. This has nothing to do with competition. This is about the economy. It's about what people are willing to spend money on today compared to in a year from now. In a year from now, when things are hopefully back to normal, when we're back in a bull market, well, that's a whole different ball game, right? People aren't worried as much about losing their jobs. People aren't worried about high interest rates because maybe the Fed's cutting rates already, right? We're just a whole different place. And at that point, this is where I think Tesla will meaningfully really start to outstrip the market, right? It won't even be comparable. But the point is, we are not living in a vacuum with Tesla. We can't just look at the fundamentals, unfortunately. Unfortunately, it's not how it works. We live in a macro world, so everything affects us. Everything affects Tesla. So we really, in my opinion, just need to be patient and not just look at this as, oh, this bull turned bear, that bear turned bull, all that. Let's be more nuanced with what we're saying and what we're thinking. All right, I really do think that once we get line of sight of things improving, of the worst behind us, once we get past the Fed U-turn, once we're a little bit past that, right? Because we can still see risks to the downside, then maybe we'll be in a more constructive place. Now, I have price targets for where I want to deploy my capital. I'm not sitting here waiting to see if after the Fed pivots, if we see a huge sell-off, right? I have price targets. I already have my buy orders set, right? One of them almost got filled the other day, and it was at $99. We went down to $101.42, I think, something like that. So it almost got filled, but I have price targets hit. I also have a certain point where if I see Tesla coming back, I see the economy coming back up, right, where I'll go ahead and just say, all right, well, maybe that was the bottom. Let's go ahead and pull the trigger. you have to think about all this from your own context, of course, right? Your own context being your own personal place, your own living situation, your own wealth creation journey, your own financial independence journey. Now, something that I would stress again is make sure that this is money you can afford to lose. And again, that should be pretty basic for everybody who follows me on this channel. But in case you aren't sure what I mean by that, make sure that you can afford the roof over your head. Make sure you can afford your food budget. Make sure you can provide for your kids. Make sure you have enough for a oh shit moment, right? Maybe that tire pops, maybe the water heater goes out, maybe you have a random leak. Make sure you have enough capital to be able to cover all that. And make sure you have enough capital to be able to cover all of that for a decent amount of time, right? Think 5 to 6 months. Think with all these layoffs happening, what if you get laid off tomorrow, right? Make sure we're thinking about that. Now, I personally don't believe in having like an emergency fund. That's not the way I do things. I would rather have that money invested or sitting in my brokerage account. But that's just me. But the point is, I have a place where I can immediately access a large amount of funds if I needed it tomorrow in an emergency. So that's how I think about it. But besides that, don't go into margin. I mean, I would imagine nobody's in margin at this point, but just another way where people can get wiped out. And trust me, I've been there. I've been wiped out by margin. It sucks. But you recover, you learn, and we move on. So I want to talk about one last thing. Let me pull this up here. And this has to do with something I heard recently about Tesla announcing potentially the new model of vehicle, the new platform, the Model 2, the $25,000 vehicle everybody talks about. And a lot of this is stemming from this announcement that came out from Tesla on January 2nd. And so really, the part that I think a lot of people are getting excited about, myself included, is this part right here. Generation 3 platform. Our investors will be able to see our most advanced production line as well as discuss long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with our leadership team. Now, I do not believe that this event will be an unveiling event. I don't think they will give us as much information as we think they will about the Generation 3 platform. I think it'll be high level. They'll probably say things along the lines of, we want to be able to produce at half the cost, at twice the speed. It's going to be the next platform. It'll be multiple variations. It'll also be the robo-taxi platform. Maybe they'll say the idea is for it to be a single casting, but I think that's like the extent of what they would say. It's not going to be, I don't think it's going to be a product unveiling. I don't think it's a product announcement. I don't think they'll go too much in detail about it. I think they'll just give enough to tease it. Now, the reason I think this is because I think that the next generation platform, the Model 3 or the Generation 3 platform, will be made first out of China. All right, I think it'll be at a Giga Shanghai. And I was on Farzad's channel the other day when Sawyer Merritt broke the news about that 9-ton Giga press going to China. And the first thing I said to Farzad was like, well, maybe that's a single piece robotaxi, single piece model, next generation model, right? That's what it could be. And the reason that I believe that is what it could be is because I think, first of all, I think to get to the cost efficiencies that they want, it has to be made in China. And I think the real market for this would be in China. That'd be the best place to do this vehicle. And I feel as though it would be almost an insult not to have the unveiling of this product in China. So I believe the next generation platform will be unveiled in China, not in the United States. And I think that would be a huge head nod to China, to the team there, to the government there, to the people there. And I think that would be seen with a lot of respect and a lot of fanfare. So I think when they actually announce it, will be in China. The other thing that they might announce on this March 1st event is the fact that they're going to have several factories, right? The other place where I think this vehicle might be produced, not now, but in the long term, will be Mexico. Why Mexico? Well, one, it's very strategic from a geo perspective, right? It's strategically located to the United States, strategically located to South America, it's strategically located to a lot of different countries. It's strategically potentially located to ship out to Australia, maybe to Japan, to Taiwan, right? It's in a very strategic location. But what I learned recently is that Mexico now, believe it or not, has 1/3 the cost of labor that China does. So imagine that. Right here in our backyard, we have a country where we can get better efficiencies from a cost perspective for these vehicles being made than we would from China. Well, that seems like a no-brainer. So that really makes you start to think that, okay, well, maybe there will be two different places where they announce, anyways, just my thoughts there. So again, I don't mean to sound pessimistic. I don't mean to sound negative. I'm just trying to be level-headed on what I think is happening. I was at the mall, not yesterday, a couple days ago. I need to grab something for a work trip I'm taking soon. And it's like the first time in the mall in years. And it was just mind-blowing to me to see how many people are out and about spending. And what's clear to me, what's not so clear to me is whether or not these people can afford all this spending, whether or not these people can afford to be out there, or whether they're just racking up credit card debt after credit card debt. It was unbelievable for me to see this. The lines were out the door just for these clothing stores. I mean, it was insane. Now, I understand retail is going through kind of a huge capitulation with pricing, right? They are like discounting like there's no tomorrow. And so, because they need to move inventory. And so people are out there and, they're seeing deals and they're buying the deals. But just because, there are deals out there, it doesn't mean you can afford it. It doesn't mean you should be buying it. So I guess I say that to remind everybody, this is not the time to be out there and spending money on clothes, frankly, on new cars, on anything that might put you into more debt, right? Don't be racking up your credit card bills. Don't be racking up new debt that you don't need. This is the time to look at your budget. And I sure hope you have a budget, especially if you follow me. Because you guys know I'm huge on budgets and about tracking your spending. But this is the time to go and look at that and start seeing where are you being wasteful. Where can you cut? Where are you spending all your money? Because I guarantee you have a lot of work to do, because everybody does. You are not being the best you can on your budget and your spending. Right? A little trick that I like to do is I have essentially an allowance I set for myself and my wife every single month. Now, it's not perfect. Sometimes we go over, sometimes we don't. But a trick I try to do to make sure we don't go over that is we try to go for the first 1 week of spending money on nothing but groceries, right? Now, obviously you got your regular bills like your house, your mortgage, your electricity, stuff like that, right? Put that to the side. Those are fixed bills. I'm not talking about fixed bills. I'm talking about spending. We try to go the first week without spending on anything. No clothes, no eating out, no random thing here or there, just on groceries, right? And what we find is when we do that, now we have 3 weeks that we can essentially use our allowance, the money that we have allocated for us to be able to spend on things we want to do or whatnot. So that's a nice little trick that you can use to try and extend the length of time, or extend to improve your chances of staying on budget. It's been a long one here. All right. Well, it's about 31 minutes into this. I really enjoyed this episode. It's kind of going back to the roots of what I wanted. I love talking about Tesla. I don't only talk about Tesla. I like talking about the economy, where we are. I like talking about budgeting and your spreadsheets, and making sure that you're taking austerity as serious as you take your analysis of Tesla and your other investments. I think you budgeting and making sure you're tracking your spending is more important than what you know about Tesla, in my opinion. Because if you can't take care of what's going on at home first, you shouldn't be looking at anything else. And that's just my opinion. But with that said, we're going to leave it there. Again, I'm a Tesla bull. I think that it's going to be the most profitable company that we've ever seen by a mile. And I do think that'll happen sooner than later. It'll happen this decade for sure. We're going to leave it there. I love you all. Thanks for watching. Don't forget, hit the like button, hit the subscribe button, ring that bell. Love you all. Peace.